You are watching Market Watch, the brief overview of the key events from the world of finance. Sales of shares of technology companies increased this week after reports that the United States is considering tightening restrictions on chip exports to China. According to a Bloomberg report, the United States has informed its allies that it is considering the possibility of applying the toughest trade restrictions if companies continue to provide China with access to advanced semiconductor technologies. This news, together with statements by Republican presidential candidate Donald Trump that Taiwan should pay the United States for its defense, caused a sharp drop in markets. The reaction to the news was expressed in a significant decline in shares of technology companies, especially chip manufacturers. The total market value of shares in this sector has decreased by more than $500 billion. The Nasdaq 100 was particularly affected, which lost a significant part of its positions the day before due to the sale of shares in semiconductor companies such as Nvidia and AMD. The main European indices also showed a significant decline, due to the fact that many European companies depend on exports to China. Oil quotes, in accordance with the possible scenario announced earlier in our publications, overcame the zone around the $81.20 level and rapidly reached the upper limit of the range around the $83.50 mark. Among the fundamental factors, expectations for a reduction in interest rates by the Federal Reserve in September are the background. Investors' attention was also focused on the upcoming meeting of the European Central Bank, where it is expected to announce the continuation of current rates. The price of gold fluctuates around historical highs, but the market looks ready for a correction. Time will tell how significant it is. As for the cryptocurrency market, with the approach of the launch of spot exchange-traded funds on Ethereum, the cryptocurrency market is showing signs of significant changes. According to recent reports, there has been a change in patterns in trading volumes on spot markets, futures, options, and perpetual contracts. This shift in market dynamics occurred after the U.S. Securities and Exchange Commission approved spot ETFs on Ethereum in May, which caused a wave of optimism among investors. Since the approval of spot ETFs for Ethereum, Ethereum has outperformed Bitcoin in various metrics. In particular, Ethereum futures have demonstrated greater resilience and a faster recovery compared to open interest in Bitcoin, which lagged behind amid market volatility. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.